Time now for Past Picks. Bruce Hakes visited with us. Michael Hakes visited with us on September the 15th of 2023. That was when he recommended Target as one of his top picks. You can see the returns there. It was recommended at about 123 US, now trading at about 151 US. That's a total return, including dividends, of plus 27%. Michael, what do you think?
Yeah, Target was a name we put in the portfolio about a year and a half ago, and I recommended it about a year and a bit ago. And it was really premised on the whole theme that quality company dramatically hit by margins in COVID and supply chain. In fact, those margins were down over 400 basis points, both at the gross margin line and operating margin line. And it was really about a recovery from there, given that they are a good track record of management. And it was well overdone in terms of the stock price and reflecting really the nadir of going forward. Today, we actually sold it probably closer to the 160, 170 level in the spring as it approached our target of closer to 180. So we like Target in terms of quality company. Its return today doesn't show a high upside, so we exited the name.
Okay. Number two on that day in September of last year, Morgan Stanley, MS, of course, on the New York Stock Exchange. There you see those numbers, a total return of 39% in about 13 months or so. Michael.
Yeah, Morgan Stanley is one we've owned in our global growth portfolio since inception, really. So almost 10 years. It'll be 10 years next year for our global growth fund. And it's really one, Morgan Stanley, that is one that really fits it's our really high quality name in the financial services group. Yes, it's cyclical, and that's why last year I recommended it, is because it was the banking business was under duress. No one was buying. There's no issuance, no IPOs, no nothing, and it was all premised on rates coming down, IPO market opening up, and that's exactly what we've seen over the last 12 months from Morgan Stanley. We still own it. We've probably sold it down a little bit as the stock rallies and our weight gets higher, and we trim it down a bit.
Is this your pick in the U.S. money center bank sector, or do you have others?
It is actually our only bank in the U.S. that we own. We own a couple of Canadian banks.
Okay. Let's go to the third pick on that day, Thermo Fisher Scientific, ticker symbol TMO in New York. There you see those numbers, a total return over the roughly 13 months since September the 15th of 2023, 9%.
Yeah, Thermo we still own. We still like it. I think at the time, if you see a replay of this interview a year or so ago, I talked about how Thermo would grow its stock price would grow with its earnings growth. So even though it's off its highs of about $600, we still like it here because it's that slow and steady grower as it supplies the pharmaceutical and biopharmaceutical industry in the U.S. And they've been successful rolling up that supplying industry over the last 15, 20 years. It's a slow and steady grower. It's more defensive. You don't expect any, it's not a rocket ship. It'll just be slow and steady, a compounder. Be like Thermo.
Those are Michael Hakes' top picks. In order, again, they were Target, ticker symbol TGT in New York, Morgan Stanley, MS in New York, and Thermo Fisher Scientific, TMO in New York. There you see the total return of those three picks over the period between September 15th last year and today, 25%. We'll be back with Michael Hakes right after this, Senior Portfolio Manager at Murray Wealth Group. He'll resume taking your questions on U.S. stocks and global stocks.